safe haven is gold. I say physical gold, bullion, coins or bars, and silver. It's not digital. You can't hack it, you can't steal it, and you can't freeze it. They just put it in a safe place. So, but Americans don't really get gold. They don't really understand it. So, yeah, I think it's just going to be a question of frog hopping from lily pad to lily pad looking for a safe place. The other scenario is that the government just throws in the towel and says, okay, all deposits are guaranteed in unlimited amounts. And I knew people who were trying to get $8 billion out of Silicon Valley Bank on that. They sent the wire instructions on Thursday night. One guy I talked to said, hey, Jim, from Thursday night to Sunday, we didn't know where the money was. We sent the wire instructions. We were trying to get it out, but we didn't know what the outcome was going to be, whether it was short or not, wire sent or not. And then Sunday night, the Fed and the FDIC came out and said, all good. We're going to, business as usual, open Monday, and it's all good. And he said the money went through. But that was what, people were facing, and they'll continue to face. I mean, the banks you mentioned, I don't know what their deposit flows are right now, but my guess is they're shrinking fast. People are getting their money out.
Renowned financial expert Jim Rickards dives deep into the world of currency, gold, and the future of the global financial system. He starts by emphasizing the enduring appeal of gold as the ultimate safe haven, a tangible asset that's impervious to hacking and theft. But, he notes, Americans may not fully grasp its significance. Rickards then takes us on a journey through the precarious state of the banking system, recounting real-life tales of wire transfers gone awry and potential bank runs. He raises a critical question. Are we on the brink of a crisis so immense that even the Federal Reserve may struggle to contain it? The intrigue escalates as Rickards explores the evolving role of the US dollar, dissecting its functions as both a payment and reserve currency. He delves into the rise of alternative payment currencies, such as China's yuan, and the potential emergence of a new global payment system, leaving viewers on the edge of their seats. But here's the twist. As he unveils the complexities of reserve currencies and the unassailable position of the dollar, Rickards presents a surprising contender that could disrupt the status quo. Could gold be the unexpected game changer? To find out, stay tuned till the end of this eye-opening interview with Jim Rickards.
And so you might just have to give a generalized blanket deposit insurance protection, and that would stop bank runs in theory. But then now you basically nationalize the U.S. banking system. You look like Argentina. So there are no, I guess the way to put it, Matt, there are no good outcomes. Either there's a catastrophe worse than 2008 that starts to look like 1931, 32, or the government offers so much protection that they've de facto nationalized the banking system. One just quick note I would add, I think when it comes to banking crisis, I'm a little bit of a magnet for trouble. I remember the Herstatt Bank collapse in 1974. That was a foreign exchange crisis. But through the early 80s with the Latin American debt crisis, and the late 80s with the S&L crisis, and then 1994, the Mexican tequila crisis with the collapse of the peso, 1998, long-term capital, dot-com, 2007, 2008, we talked about that. And today, October 19th, 1987, the stock market fell 22% in one day. Not a year, but in one day. So I've been on the front lines of all those. But the one thing I've noticed is that each crisis gets bigger than the one before, and each bailout is bigger than the one before. And the question I'm asking as an analyst is, are we at the point where the crises are so big it's bigger than the Fed? In other words, we're not really talking about bailing out a bank or a sector. People lose confidence in the dollar itself, and we do seem to be heading in that direction. Yeah, I mean, you can think of the dollar and gold as kind of two sides of the seesaw. One's up and the other one's down, and then vice versa. When people talk about the price of gold, it's really the dollar price of gold. You can think of gold by weight. So, a strong dollar usually means a lower dollar price for gold, and a weaker dollar means a higher dollar price for gold. And we've seen that dynamic play out in recent months. It's not the only driver of gold. It's one of them. There's a good old-fashioned supply and demand. I think in a bank, sometimes you see in a financial panic, gold and the dollar will both get stronger. The dollar will get stronger against other currencies, and gold will get stronger measured in dollar terms because there's a flight to quality. Get me out of, yen or yuan or rubles or euros or whatever else it might be. Get me into treasury securities. And the thing about a flight to quality it plays out in security space. What you want to get are really treasury securities. You want to get really short-term treasury bills and treasury notes. But to do that, you need dollars. If you're a foreign banker or foreign investor and you want to buy some 4-week treasury bills, you got to get dollars to pay for them. So the rush into save treasury securities creates a demand for dollars. And then at the same time, gold is another saving. So sometimes it's the seesaw. Sometimes they can both go up at once. I guess what I'm really saying is that I see gold getting stronger. The dollar is very much in the news. It's one of the questions I get most frequently. You talk about Ukraine or China or inflation and all that, but it usually comes back pretty quickly to the dollar. But I find there's a lot of confusion on the topic. And the confusion comes from the fact that everyone talks about the end of the dollar, the dollar's going away as a global reserve currency, et cetera. But people don't distinguish between the role of the dollar as a payment currency and the role of the dollar as a reserve currency. And those are two very different things. There's some linkages, but a payment currency, basically, if I want to buy goods and services from you, and I tender some form of currency and you're willing to accept it, and you're confident someone else will accept it from you, that's a good payment currency. It could be dollars, it could be euros or yuan, or it could be Russian rubles or Brazilian reais or anything, as long as people are willing to accept it, have confidence in it. And when we were kids, we'd use baseball cards and bottle caps. So almost anything could be a reserve currency. You need payment channels, and there's a little more to it than that, but that's basically it. A reserve currency is a very different thing. First of all, we don't really have reserve currencies. You go to the People's Bank of China, they don't have $100 bills stacked up in the basement. What they own are U.S. Treasury securities, which are digital, by the way. The last paper Treasury security was issued, I think, around 1979. So what they have are actually securities. So when people say reserve currency, what they really mean is securities that hold your reserves denominated in a currency. So, of course, Treasury securities are denominated in dollars, but they don't have actual dollars, in a bank account or a physical form. They own securities. Now, as far as the payment currency is concerned, that's relatively easy to displace. This is what all the news is about. So Saudi Arabia is talking to China about accepting yuan in exchange for Saudi oil. Brazil and China just negotiated a major agreement where the Brazilians could pay in reais for Chinese exports, manufactured products, semiconductors. The Chinese can pay in yuan for Brazilian, sugarcane, soybeans, aircraft, Embraer, and oil and other products from Brazil. The BRICS, that's Brazil, Russia, India, China, South Africa. About a third, which is close to half the population of the world when you throw in India and China in the same group. They've now rebranded themselves as BRICS Plus. So when they have their meetings, they're inviting Iran, Turkey, Argentina, and a lot of large countries, important countries that were not part of the original BRICS. They're working on a new payment currency, and that we're likely to see a big rollout of that this coming August. Don't know exactly what it'll be. They're working behind the scenes. It could be commodity backed. It could be gold backed. I'm not predicting that, but that's certainly one of the possibilities that we need to look at. But again, these are payment currencies. Now, when you get over to reserve currencies, it's much stickier. It's much harder to displace the dollar as reserve currency because it's not really about the currency, as I mentioned. It's about the securities market. Who has a securities market that's big enough, liquid enough? I mean, you need all maturities of securities from 4 weeks to 30 years, 10-year notes, 5-year notes, 2-year notes. You need primary dealers. You need an underwriting group, which is what the primary dealers are. They also make markets. You need settlement, clearance, distribution, custodians. You need hedging devices, when issue trading, repos, futures, options, et cetera. You need that whole network. We've been building it for 230 years since Alexander Hamilton. And no one else has it or anything really close to it. Maybe the Germans and the Italians, but they're not really big enough. So the point is, and above all, you need the rule of law. I mean, nobody trusts the Chinese. Nobody trusts the Russians with their money. And they don't even have large sovereign bond markets anyway. So the dollar kind of wins the reserve currency, meaning really securities, crown, because by default, there's nothing else that can compete with it. And there won't be soon. I mean, the things I described take 10 or 20 years to build. And again, the rule of law is probably the most important one. So you're not going to see the dollar knocked off as a reserve currency, so-called, by other currencies or other bond markets. But there is one thing that could knock the dollar off, which is gold. Gold is just gold. If you have physical gold, bullion or coins, you don't need all that other stuff. You just put it in a safe place and guard it, like Fort Knox or whatever the Russians and Chinese have their equivalents, and just sit on it. It's not digital. You can't hack it. You can't freeze it, etc. So if someone said, so the idea of the dollar losing ground as a payment currency is completely plausible. It'll happen in stages, and it's happening already. The idea of the dollar losing its role as a reserve currency, it's not going to lose it to another currency, but it could lose it to gold. And part of the reason for that, I always say that foreign countries can't really